What's happening to the price of gold? Hello, investors. Have you checked out the price of gold? Gold closed at $2230 on March 29, 2024. In this video, we will have a quick look at the gold price chart and then look at ways to invest in gold with the Muffet approach. Gold had a long period of consolidation between 2013 to 2018. Then we had a quick move up in the price of gold from $1,200 to $2,000. We then had a period of consolidation, and then we have moved up again. There are various reasons that can be attributed to this price rise. The key factor, according to Muffet Investments, is the loss of purchasing power of the dollar. Over the last 100 years, the purchasing power of the dollar has steadily decreased over time due to inflation and money printing. In 1913, $1 would buy to 30 Hershey chocolate bars, but now if you want to buy the same number of bars, it will cost you $26.13. $1 can buy to 10 bottles of beer, but it now costs almost $20. The price of gold has followed the depreciation of the dollar. The fact that the purchasing power of the dollar will fall over time is the best reason to hold any asset of quality. The second reason can be attributed to the central bank purchasing of gold. This is the chart showing net central bank demand for gold. 2022 showed record buying and 2023 was quite close to 2022. The reasons why central banks are buying gold can be varied. But one reason for this could be geopolitical. China was the biggest buyer of gold according to World Gold Council, and they have deliberately moved away from holding onto U.S. treasuries. Gold price has an inverse relationship to the yield of the 10-year treasuries. This is a chart showing this relationship. As the yield started to go down, the price of gold shot up. We then had a dead cat bounce in the 10-year yield, and during this time gold consolidated, and according to the Muffet view, the yields will start falling once the Federal Reserve starts cutting, and this will put wind in the sails for gold. Why are we so sure that the yields will fall? You only need to see the Federal Reserve balance sheet, which has gone up exponentially, even though it has fallen slightly in the last year. The other reason is the exponential growth in the public and private sector debt in U.S. This chart shows this and currently stands at $90 trillion as of 2022. The current interest rates are unsustainable as the U.S. government still runs a big budget deficit. Higher interest rates would mean that they have to pay higher rates on their debt. This is the strongest reason for the yield to drift lower. Putting in all the facts that we know, how can we make smart investment decisions? One way to do this is to buy gold directly, like gold coins or bars. But the problem with this is that it is very difficult to sell and illiquid. Another way is to own gold mining companies. This chart shows the price of gold versus Barrick Gold, which is one of Muffet's favorite stocks. Barrick Gold has underperformed significantly compared to gold by almost 40%. The reason for this is that Barrick Gold all-in sustaining cost for gold used to $1,200 but is now $1,400. But we think that Barrick Gold will benefit as long as price of gold is above $2,020. One way to invest is to buy Barrick Gold stock. If you are very conservative and don't want to own Barrick Gold at current prices, you can sell put options. The January 2026 $15 puts are $1.63. If you sell these puts, if the price of Barrick Gold is below $15 in 2026, you may be assigned the stock, but the net entry would be $13.37 as you had collected the $1.63 when you sold the puts. These are only Muffet views, and we are not investment advisors. Please do own research before investing.